Tesla, Inc. The Nasdaq, TSLA, has long been one of the most polarizing stocks in the world of finance. Some see it as the ultimate growth machine, a company destined to dominate not just the electric vehicle EV industry but also artificial intelligence, robotics, and energy storage. Others see it as a bubble inflated by hype, teetering on shaky fundamentals, and overly dependent on Elon Musk's charisma. As we head deeper into 2025, investors are once again divided. Is Tesla stock still a generational buy, or is it slowly losing steam? In this script, we will unpack Tesla's current financials, its growth potential, the challenges it faces, and where its stock could be heading over the next few years. Tesla began its journey in 2003 as a scrappy Silicon Valley startup trying to prove that electric vehicles could be sexy, fast, and viable. By 2012, with the launch of the Model S, it proved that EVs were not just niche eco-cars but genuine performance vehicles. The launch of the Model 3 in 2017 was Tesla's true mass-market breakthrough, catapulting the company into global recognition. Fast forward to today, Tesla has built gigafactories around the globe, delivered millions of vehicles annually, and become one of the most valuable companies on Earth. But the Tesla stock story is not just about cars, it's about technology, data, and the future of transportation. When we talk about Tesla's financials, it's important to understand the fundamentals that drive its valuation. As of early 2025, Tesla is delivering around 2 million vehicles per year, giving it the lion's share of the global EV market. Revenue has grown consistently, but margins have come under pressure. One reason is the price wars in the EV sector. As more automakers BYD in China to Ford and GM in the United States enter the EV space, Tesla has been forced to cut prices in order to remain competitive. This has squeezed its automotive gross margin, which once stood at an enviable 30% but has now slipped closer to the mid-teens. For long-term investors, this raises concerns: can Tesla maintain profitability while scaling globally? Despite these concerns, Tesla remains far ahead of competitors in key areas. Its battery technology, for instance, remains industry-leading, thanks to innovations in energy density, thermal management, and cost reduction. The company's energy storage business, including its Powerwall and Megapack products, is quietly becoming a massive revenue driver. In fact, some analysts argue that Tesla's energy segment could eventually rival or even surpass its automotive business in terms of profitability. This diversification makes Tesla not just a car company but a full-scale energy solutions provider. One of Tesla's most hyped areas of innovation is full self-driving FSD. Elon Musk has long promised that Tesla vehicles will become autonomous robo-taxis, generating passive income for owners and revolutionizing urban transport. While critics point out that Tesla's FSD is still not fully autonomous and faces regulatory hurdles, progress has been undeniable. Millions of cars equipped with Tesla's advanced driver assistance system are gathering real-world data daily. This massive data advantage, combined with Tesla's custom Dojo supercomputer, positions the company at the forefront of AI-driven mobility. If Tesla cracks autonomy, it could unlock a trillion-dollar opportunity. If not, it risks falling behind competitors like Waymo and Cruise, which are already operating robotaxis in select U.S. cities. Now, let's consider the stock itself. Tesla has always been a battleground stock. Its valuation, even after recent corrections, is sky-high compared to traditional automakers. As of 2025, Tesla trades at a forward price-to-earnings ratio many times higher than Toyota, GM, or Volkswagen. Bulls argue that this premium is justified because Tesla isn't just a carmaker, it's a technology and energy company. Bears counter that the market is overestimating Tesla's ability to execute and underestimating how quickly competition can catch up. This tug-of-war is what makes Tesla one of the most volatile and widely debated stocks in history. Another factor influencing Tesla's stock is Elon Musk himself. Musk is both Tesla's greatest strength and its biggest risk. His visionary leadership and relentless drive are undeniable. Him, Tesla likely would not exist today. But Musk is also controversial, often sparking headlines with his tweets, public comments, and ventures outside Tesla, such as SpaceX, Neuralink, and X formerly Twitter. Investors worry about whether Musk is stretched too thin, and whether his distractions could hurt Tesla's long-term execution. Yet at the same time, Musk's cult-like following helps maintain Tesla's brand power and market confidence. In terms of global expansion, Tesla has made significant strides. Its gigafactories in Shanghai, Berlin, and Austin have allowed it to scale production rapidly. However, the company faces unique challenges in different regions. In China, Tesla competes head-to-head with BYD, which has been aggressive in pricing and has the advantage of strong domestic support. In Europe, legacy automakers are fighting back with their own EV lineups. In the U.S., while Tesla remains dominant, government subsidies and incentives for EVs have allowed competitors like Rivian and Lucid to carve out niches. The result is that Tesla is no longer the only EV game in town, and investors must weigh how much of the market Tesla can realistically retain. Looking at the broader industry, the EV revolution is no longer a question of if, but when. Governments worldwide are pushing for zero-emission vehicles, with bans on internal combustion engines coming into effect in the White. Tesla, as the EV pioneer, stands to benefit immensely from this transition. But the challenge lies in scaling sustainably, managing supply chains, and keeping costs competitive. Battery raw materials such as lithium, nickel, and cobalt are subject to volatile pricing, and Tesla has had to secure long-term contracts to stabilize its supply chain. Investors must pay attention to how these cost pressures impact profitability. Tesla's stock has also been a magnet for retail investors. The so-called Tesla army of loyal shareholders has helped push its valuation to astronomical levels in the past. This retail enthusiasm makes Tesla unique, as traditional automakers do not command such passionate investor bases. However, this also means the stock can swing wildly based on sentiment. A single Musk tweet or an earnings miss can cause billions in market cap to vanish overnight. For traders, Tesla's volatility is a playground. For long-term investors, it's a test of conviction. Another unrealistic aspect of Tesla's story is its software revenue model. Unlike traditional automakers that primarily make money on the initial vehicle sale, Tesla has opened the door to recurring revenue streams through software updates, subscription services, and autonomous driving packages. For instance, Tesla's full self-driving subscription currently costs hundreds per month, creating a steady flow of income beyond the hardware. If Tesla can scale this model effectively, it could transform into something closer to a software company with automotive hardware as the platform, like how Apple monetizes its ecosystem through services. Yet, no investment story is complete without acknowledging the risks. Tesla faces regulatory scrutiny, particularly around autopilot safety claims. Several high-profile accidents have drawn criticism, and regulators in the U.S. and abroad are keeping a close eye on Tesla's driver assistance systems. Labor issues, environmental concerns over battery production, and geopolitical tensions, particularly U.S.-China relations, are other headwinds. Investors must also consider the possibility that Tesla's valuation leaves little room for error. Any slowdown in growth could trigger sharp corrections. So, where does Tesla stock go from here? Bulls envision a future where Tesla dominates EVs, cracks full autonomy, revolutionizes energy storage, and builds humanoid robots at scale. In this scenario, Tesla could become one of the most valuable companies of all time, potentially worth several trillions. Bears, on the other hand, see Tesla as an overhyped automaker facing relentless competition, shrinking margins, and unrealistic promises. In their view, Tesla stock could deflate significantly, trading closer to traditional automaker multiples. The truth, as always, may lie somewhere in between. From an investment standpoint, Tesla requires a strong stomach. This is not a stock for the faint of heart or those seeking stable dividends. It is a high-risk, high-reward play on the future of transportation, energy, and artificial intelligence. For believers, Tesla represents the future, a chance to invest in a once-in-a-generation company. For skeptics, it is a bubble waiting to burst. The reality is that Tesla continues to execute on many fronts, but the expectations baked into its stock price remain extremely high. For long-term investors, the key question is simple: do you believe in Tesla's vision? If you think the world is heading toward electrification, autonomy, and sustainable energy, and that Tesla will lead that charge, then buying and holding Tesla stock could pay off massively in the next decade. If you are more skeptical and believe competition, regulation, and execution challenges will erode Tesla's lead, then caution is warranted. Either way, Tesla is not just another stock, it is a story, a movement, and a mirror reflecting both investor hope and hype.